Welcome, guys, to the daily analysis for January 16th. So, we are finally at the Friday of an OPEX week. This week was supposedly event packed. We had CPI on Tuesday, had PPI on Wednesday, along with what was supposed to be the Supreme Court decision, or at least an opinion on Trump tariffs. And then we have OPEX today. And what has happened? Nothing. They were not able to break it out. They obviously couldn't break it lower. We have stuck in this familiar 618 to 626 range for the last 4 days. They had a breakout attempt after CPI that failed with the bank earnings. Obviously, nothing on the Supreme Court decision. We had a breakdown attempt on Wednesday, with the Supreme Court decision, nothing there. And then yesterday, another breakout attempt did not really work out. Now, the daily chart here on QQQ is a bit wrong because price never really went to 628 yesterday. It was stuck lower. But overall, the last 4 days of this week have been a nothing burger. Now, where are we on the larger context? On the larger context, let's have a quick review. We had the V-shaped recovery, all right, after April lows. This is the first 9MA box, or the first consolidation since that V-shaped recovery. All right, so I had compared it to the first consolidation we had after such a V-shaped recovery in 2020. So we had this V-shaped recovery and then the first consolidation, also an inside month there before we broke out. That's, I would say, is the most apt comparison. We are kind of closer to this stage than we are not. At the same time, on the weekly charts, the contraction is getting tighter and tighter. You guys can see the squeeze appearing. We had this big loose range early in October and November, and that's just gotten smaller and smaller and smaller. So ideally, we should be expanding out of it soon. And the fact that we are still above the 9-week moving average, the bias has to remain to the upside. But at the same time, if things do start to fail, we will be cautious because after such a contraction, moves can be explosive. All right, so that's the overall context as we head to this OPEX day. Can it break out today? It could. The chances are low, right? Because we have a holiday on Monday and today's OPEX day. It could also just wait till next week. But then sometimes, given the kind of contraction, there is a tendency to front run. So it's hard to say. All right. All we can do is not really think short term, recognize the potential on the larger time frames, and position ourselves for whenever it wants to break out. All right. So now that the context is clear, let's move to the hourly charts for intraday action. So yesterday we had gapped up. We had this nice consolidation. That was obviously a small victory for the bulls. Ideally, they would have tried to attempt a breakout at 628 to gain control, but they did not. They actually broke below the support of 625 to 626, came to 622.5, and then closed even below that. So obviously that was risky territory, and one have to be cautious. Overnight, we are gapping up above that again. All right, so we are above 622.5, so that's a good sign. This area is going to be a major level for today, as long as we are good. If price holds below that, we likely see more weakness, go back to this zone. And I'm not sure if the support can hold this time. We already had a failed breakdown. So crucial that we stay above 622.5 today. Was the resistance on the upside? 628 is the main area. We can be neutral between 622.5 and 628. Above 628, we can see a move to 631 and 634. So those are your levels on the upside for QQQ. What about SPY?